Before I even tell you what Bitcoin's doing, we need to understand where we are trading. Where are we playing in right now? How am I going to do this? I'm going to use a tool that I use a lot in every single one of my videos. Why do I use it so much? Because it gives you an insight into a really, really good piece of information, which is really hard to hide by market makers. That is called volume. And with it, we're going to be using a fixed range volume profile or an anchored volume profile. I don't really care which one you use, as long as you get to see the volume. If you would like a whole little masterclass on why I use it, how to read it, and most importantly, when to use it, please let me know in the comment section and I will do my absolute best to make a really cool video for you. First off, okay, let's have a really quick look. We've got a massive range, okay, and we have got a more local range. So what are we going to do? We're going to trace two. The first one's going to be of this smaller range, and we're going to be able to see something. We've got the blue line, this top one, that's the value area high, which is currently the one that we're fighting with. Okay, we're getting the price of Bitcoin. Let me go on the 1 hourly time frame. We're getting compressed between the highest point of transactional value, which is the point of control, this yellow line, and this blue line, which is the value area high. We're not able to break the value area high. We're not really able to break the value area low. Okay, so what's my plan? It's fairly simple. If we lose point of control, we're gonna go straight to the value area low, ideally. Okay, now I'm also going to trace a Fibonacci retracement from this bigger push up that we've just had. And we're gonna see how the 0.618, how our golden pocket, the most important level on our whole Fibonacci tool, is going to come in very, very close to our value area low. Okay, if you want to know why I've got this level, the 0.702, I am currently making a video telling you exactly why and why potentially it could be useful for you to use it. Okay, so the golden pocket sits very nicely around this area. Okay, now what are we going to do next? We're going to zoom out, go on the 4 hourly time frame, and we're going to trace the exact same thing from the whole thing. Okay, see what information we can get. Well, we can get something already very important. Okay, this is again value area high, point of control, and the value area low. Okay, Bitcoin currently has found a major resistance at the value area low. We've really struggled to break up and go past the value area. Okay, we were very closely able to, and then we got absorbed and went straight back down. Okay, so first bearish signal, I've just told you, which one was around this area, which was the area of highest transactional volume. No, it wasn't actually, it was the 0.618 level and the value area low. And then if we break this level, which is basically going above the recent high, my next target is going to be slightly above our point of control. Okay, which would mean what? Why do I think this? Because then the price would go above this recent high, grab some liquidity, and I'm now going to turn on our indicators, okay, because it's just going to make it a lot easier for me to tell you why. We are going to see, hold on, let me hide some stuff so there's no chaotic for you. We're going to see we've got a daily fair value gap just above this level, okay, just above the highest transactional volume. It looks like the price of Bitcoin could very easily hit it there, hit this fair value gap, and then get a push down. I'm not sure if you remember, you probably don't because you weren't watching my channel, but when we were exactly here, I was waiting for the price to go up and touch the fair value gap. and then get this move down that we got. We didn't get that. Okay, we didn't actually hit the fair value gap. That's why, like I quite like to say, this fair value gap is still virgin. It hasn't been touched yet. Okay, therefore I strongly believe that on the first contact we are going to get a reaction from it. Okay, additionally, also worth noting, it is basically very, very closely with our point of control. Therefore, it wouldn't need to travel so much high up. It would just need to do a small deviation out of the point of control. Okay, now let's zoom in and let's see what is going on with this thing, with Bitcoin. Okay, I'm going to hide our indicators really quickly as well, just so that I can give you a really nice reading, and I'm finished with this as well. We've essentially just got a range. Fairly simple. There's no more difference from it. Okay, we got quite a big and extensive push up, and then now we're going into a range. Okay, during this range there was people that were going long, just like this, placing their stop loss just below the recent lows, and then with one big move we've cleared all of them out. And then in the exact same way, we had people doing the opposite. We had people going short around this area with their stop loss just above the recent highs, and then the price went up and then cleared all of those short positions. So the market has grabbed liquidity on this sideways range from both sides. So what do I think is going to happen? Well, I'm not a wizard. I'm not going to try and guess, but I am going to be treating this as a sideways range, basically, which means short and long. Okay, very simple invalidation level is fairly easy. If this was the wick that went down to grab all of the liquidity from all of the long positions, that means that if the price gives me a reason to come down here, I could potentially look for a long, a stop loss just there, because in theory, if I want to be bullish, we don't really need to go back down there. And then a take profit of around this. This is a scalping trade. This is not a make or break. You're not going to become a millionaire with it, but that's basically it. If the price comes down and your stop loss gets hit, fine, perfect. That means that we are going a bit lower into our area. Okay. Again, if the price does the opposite and we actually get a push up at around this area, I could potentially look for a short position doing the exact same thing. Take profit to the bottom side of this channel, and my stop loss just above the recent high. Why? Because if I want to think the price is going down, the price shouldn't go above this level, because this has grabbed enough liquidity. It doesn't need to revisit that area. Okay? If the price goes up and I get stopped out, fine. I don't really care. I know the price can carry on going up. Okay? So how do I sum this up? Well, let's turn on our indicators and let's have a really quick look. Let's go on the 4 hourly time frame so I can give you really clear market structure, really clear market reading. If we get a breakdown from the channel in which we currently are in, you've got two options. The first one being going long on there and then averaging out your trade if the price drops to around this area, which would leave you with an average price of around here. Okay, why am I saying the 0.5 level? Because that would mean that the price would hit the first entry point, a quite irrelevant point of the Fibonacci retracement, and then on top of that, it was a previous resistance. Once you break a resistance, it turns into a support. This was a little accumulation range which we broke out of, and then now we could just be getting a retest to the top side of this range. Okay, this is why potentially we could go long If it carries on going down, long. If we get stopped out, absolutely fine, because then that means the price is crashing down and it's going down to 55k, okay, which is where we have this order block and this fair value gap, strong daily fair value gap. Okay, now if the price decides to go up, well, absolutely fine as well. I've got a daily fair value gap and I've got a 4-hourly fair value gap just above the recent high and just a slight deviation from my point of control. Basically $69,000, that's where I want to see the price of Bitcoin for me to go short. Okay, again, very similar thing. I am probably going to be averaging out my trade, because there I personally made the mistake of trying to wait for the price to hit my fair value gap for me to go short. It never hit it, so I never got to go short. So now I'm not going to do the same mistake twice. So I'm going to average out first trade, probably second trade, and if I really want to, I'll split my position into 3 and get an averaged out price. Okay, and then this will be my midpoint, and then this is going to be where my trade is. Okay, that's my plan. Let's have a really quick look at Ethereum, because Ethereum's got a really similar setup. Okay, it actually has an even better setup. So what we're going to do is we're going to do the exact same thing, hide my indicators, and first of this little smaller range in which we've been in, trace a either fixed range volume profile, an anchored volume profile, whatever you want to do. Okay, we've got the exact same scenario. We're fighting between the value area high and the point of control. We're getting compressed between those two. And where would I really like to see the price of Ethereum? Around this area. Why am I not saying the value area low? Because I'm getting really tempted and I'm getting really stopped by the fact I've got such a high volume node right there. Okay, this is why if you really want to learn how to use this, just tell me and I'll make a video on it. But just tell me, okay? This is a really high volume node, and on top of that, if I turn on our indicators, it's also going to be where I have a daily fair value gap and a 4-hourly fair value gap. So this area here is honestly the best place I could find to look for a long. Okay, so additionally, just for the fun of it, I'm going to trace a Fibonacci retracement from this whole push. It's also the 0.5 level. Okay, this area looks amazing. This would be a place where I would probably sell my house and sell my teeth and then go long. Okay, with a stop loss just below this fair value gap, because we really shouldn't lose it. And then my take profit, first take profit reaching the value area high, and then I would probably move on to break even, take probably 50 or 75% of my profits, and then leave it to run, see if I'm lucky and if I'm able to get a bit more of a bigger push. Zooming in a lot more, let's go on the 30-minute time frame so that we can see it. We've got the exact same thing. We have got a sideways range, which has basically had some liquidity taken from the bottom, some liquidity taken on the top, and now let's just wait. Okay, I've told you where I want to go long, and I'm going to be trading this the exact same way. If we make it to around this area, it's the exact same protocol. Look for a long, your stop loss just below the recent wick, because we shouldn't really go lower, and then vice versa for the shorts. If I go to the top side of this channel, stop loss just there, and then my take profit on the bottom side of this channel. That's basically it. That's everything that I'm going to be doing. Okay, let's zoom out again. Let me delete all of this. It's looking really ugly. Where do I think the price of Ethereum could shoot up? I haven't actually traced anything for this yet, so let's see what we can see. Okay, this is really interesting as well. Why? Because we've got a really similar thing as Bitcoin. We've got a daily fair value gap sitting with the value area low sitting just on top of a recent high. Okay, so ideally What would this mean? It would mean the price of Ethereum grabs some liquidity from the recent high, hits the value area low, which is also where we have got a fair value gap, a daily fair value gap, and then ideally from there we would look for a short position. That's at 1,900. That's it. Really, there's not much more for me to say. There's not much more that I need on my charts. One thing I would actually quite like to point out is that if I turn on the RSI, which is our smart oscillator, we can see something which means that we could potentially get that push down, which we are waiting on. We've hit an exponential moving average on the daily time frame, and on top of that, we're basically overbought on the daily time frame, which would mean we could get a retracement here back to the daily fair value gap, and then that push up around there. This push up, just seeing it now, we've got the smart trend right there, which would basically just add one more thing of why I would like to take a short position. If you are wondering what is this smart trend, first off, I've made a whole little series of videos in which I tell you every single thing about our indicators, what they are, how you use them, how you get them, because you can actually get them for free. And then two, I've also made a completely free course, a course in which I tell you about everything, about fair value gaps, about Fibonacci, about liquidity, about risk management. But basically, in short, when you get really close to the smart trend, you get some really good entry points. You get some fairly good entry points. Okay. Now you obviously need to always prioritize the market structure. You need to prioritize the price action, because that's always going to rule over any indicator that you have got. Okay, so thank you very much for watching. Make sure you leave a like, make sure you subscribe, and make sure as well to let me know any comments or questions that you may have. Thank you so much for watching, and see you soon. Bye bye.